Hi guys, and welcome to the iGaming Next panel on mergers, dominance, and market share. We have a great panelists and set of panelists here to say hi to you. But first, let's talk a little bit about what we're going to discuss this morning. And it's the topic on most people's minds, right? It's M&A, the crazy world of mergers and acquisitions that we've been involved in for especially the last 12 months. But it seems like it's going to go on unabated for some time as well. And I'm very fortunate to be accompanied by some of the best and most experienced people in the industry to be able to talk about this morning. With me, I've got Mohit Kansal. He's a partner at the Clairvest Group, which is a private equity company, it's a very famous private equity company with more than 2.5 billion assets under management. And if I'm not mistaken, they've actually done at least 15 to 20 on gaming transactions over the last 20 years. Very fortunate to have Mohit with us. He'll be talking with us a lot on the acquisition side. We also have Tsachi Maimon. I've actually dealt a lot with Tsachi on the other side of the table on the M&A space. I do the selling of the assets, and Tsachi usually does the buying of the assets. He's a CEO of Aspire. He's ex-Playtech as well, and he's a very good track record of having listed the business on the Nasdaq Stock Exchange. Recently bought BTO Bet, and before that, Pariplay as well. And he has a penchant for tennis, which I look forward to testing that in real life. Gentlemen, good morning and good to see you. So let's just dive straight into it, right? What's your immediate instinct, right, when you look at M&As and what's been going on in the gaming industry, right? Why do you think there's been so much M&A to date? Mohit, you go first.
Yeah, no, Julian, I appreciate it. Yeah, it's euphoric. you pop open the Wall Street Journal, your email, your news feed, you see the next deal happening. The reason, frankly, is the red, white, and blue. It's the United States of America. The opportunity is immense. People put different dollar amounts on it, $10 to $20 billion, depending on what states open and at what pace. But you have this huge opportunity out there. And when people see that huge opportunity and they see that growth, and people are growing, they're growing 100, 200% year over year, you have all this capital that's sitting there, right? And all this money is chasing deals to capture that growth. And I just looked it up ahead of time. Like, for instance, DraftKings has over $2.5 billion just sitting there on the balance sheet. I think Flutter has over $600 billion. So you got all this capital and all this growth, and people are looking for any way possible to give them an edge to capture that growth and get after it. And I'm sure we'll get into the different types of M&A that you've seen, but really anything that can help them grow quicker or get an edge is on the table, and you've seen that happen over the past few years.
Yeah, absolutely. Tsachi, what's your perspective?
I think that, when you look at an M&A, so it needs to come from a specific need. And when you check the need in the market, so for example, in the US, there is a specific need for operators to acquire their own technology because of the regulated markets, the states being rolled out very fast. Mm-hmm. So this is one need, to acquire technology very fast. In Europe or the rest of the world that is not the US, it's mainly to increase volumes, to increase revenues. So you see different type of M&As. And some of those companies, the European, want to grow in the US, so they acquire revenues in Europe in order to keep up. Most of them are still public. So I think it comes from those two different needs in those two different jurisdictions that trigger a lot of M&As.
Yeah, I get that. And I also think that the imbalance of the dollar with the euro, and especially with the pound, has actually made M&As more favorable as well. We saw that last year, right? There was a lot of dollar imbalance, particularly with regards to valuations. And most of the European companies state their revenues in dollars anyway, right? For strategic reasons. And I guess that has also incentivized US companies to take the plunge, so to speak. But personally, and Tsachi, I want to ask you first, how have you found the M&A market over the last 12 months, specifically for Aspire?
I think that if I'm going a little bit zooming out before Aspire, I think it's the most busiest year in M&As that I remember in the last 10 years. And I think with the US market triggered the majority of the M&As. And for Aspire, it was interesting because in 15 months, we did 2 acquisitions where they were acquired as a different bread and butter to what we used to have. We used to have a gaming platform, managed services, and now we acquired game studio, aggregation, sport platform. Mm-hmm. So in addition to an acquisition, there is a learning curve that we are in right now to see, the acquisition is not ending when you pay the seller. It's just starting. So it's very interesting times from that aspect. Yeah.
Yeah, I fully empathize with you. So personally, from RB Capital's perspective, it's been our most intensive 12 months, most intensive 15, right? Because it actually started around the February timeframe. And there's a lot of money which has been underinvested, and it's almost like it's a bit like when the Bitcoin frenzy of a few days ago, right? People have a lot of amassed capital. They don't know how long that value is going to last, so buy. Just get into that space, buy the assets whilst they still go cheap, right? Mohit, what about you? How's the M&A market been specifically for Clairvest?
It's been busy. It's been tough if you're a buyer, if I'm honest. Because of that capital just sitting on the sidelines, and we see a lot of stuff, and we put offers in and whatnot, but it's hard to compete. With being a finance person, I don't want to get too much into detail, but our cost of capital is generally sometimes higher than some of the other folks, Tsachi included, and they're able to access capital or have a strategic angle that allows them to pay a lot more, at least believe they should pay a lot more, makes it tough to be a buyer. It's been good to own assets, because the flip side is, anything that you have in gaming in your portfolio has probably doubled or tripled in the last 2 years, even if you did nothing, just because the valuations have skyrocketed. But to your point, Julian, it has been busy. There's been a lot of deals. I don't see any reason why it should stop, if I'm honest. I mean, the SPAC market's, thinning out a bit, but capital's still cheap, growth is still there. So let's see. But there's been a lot, and frankly, I don't yet see it slowing down too much.
No, me neither. And actually, to your point, it's mainly been a seller's market so far. We think it's going to remain a seller's market for the next probably 9 to 12 months, right? You mentioned SPAC, and I want to get onto that a bit further into the conversation, right? But before that, right, and Mohit, probably it'd be good to just give your industry perspective so far. What acquisitions in gaming have surprised you the most over the last 12 months?
Yeah, for sure. I guess a few. One was so everyone's obviously familiar with DraftKings, top 2 player in the US. When they bought the Vegas Sports Information Network, VSiN. So VSiN is like an affiliate. They have they run some shows, they run podcasts and whatnot. It's been traditionally kind of church and state. You've had the operators who are going to buy traffic through affiliates, but this was a move to go upstream, actually into owning media assets themselves. So this is a big step forward for them, and frankly opens the floodgates a bit, because again, traditionally they've been buying traffic, and because they're all looking for edges, they're all looking for how do I differentiate? And to Tsachi's point, the need is I need that traffic to grow. They're actually now moving upstream and buying media assets, which who knows what's next? If you were to take that to the extreme, could DraftKings and FanDuel actually buy a media network? Could they start bidding on rights for the NFL, NHL? Who knows? The sky's the limit. Maybe, who knows? Maybe some special football game you can only see streamed live through the DraftKings app. Why not? Like that I feel is on the horizon, because again, they're paying so much for their customers. And they do not want to be bidding in Google and Facebook. So they're looking for any edge they can. And that was, when I saw that, it was like, wow, that's a step forward, and it might open the floodgates to a bunch more.
I think so too. I think it's actually going to give us a lot more creative M&As over the next few months, probably years as well, until we see some regulation. And I suspect that there's going to be some regulation in this industry. Tsachi, what has surprised you the most in the M&A world?
I will not go far from Mohit, and I must say that I will also mention DraftKings, but for a different acquisition that they did that surprised me. Not the acquisition itself, but the valuation of it. Which was the acquisition of Blue Ribbon, which is at the end, it's a company that provide games feature. It's not even the games itself, with a jackpot around it. Don't get me wrong, it's one of the best technologies that were out there, but it surprised me because it's a big valuation for a startup that have a layer on top of the games. And this was something that caught me with a surprise when it happened.
Yeah, I think it's safe to say that DraftKings have gone through a range of very interesting acquisitions. Right now, I think part of it is strategic, right? When you've grown so much, it's going to be a bit of a strategic acquisition just to increase your overview, right, in terms of your paying customers and your potential customers. But maybe sometimes they want to do it just to surprise the market, right? I'm quite impressed sometimes when you get to see these strategic acquisitions that are more to shock rather than for strategy, right? And DraftKings and a couple of others, right, which I probably shouldn't mention here because I'm under NDA with one of them, and you probably find out in a few weeks. But they are going down the route of almost shock acquisitions, right? That's my view so far. And I think part of this is the amount of excess capital lying around, right? So VCs haven't really bought a lot over the last 3 years, right? Well, they've bought cautiously, right? But if you see the M&A angle, the acquisitions haven't been that high. But then when you see the last 12 months, people are just like, right, let's just do it. Let's just go crazy, and even valuations, right? If you look at multiples of EBITDA, that's gone crazy, hence why it's a seller's market. So I actually think this is going to go on for some time, right? I can't see this changing for the near future.
And Julian, one trend which I think is tying into what Tsachi mentioned is, and the Europeans will be well aware, but I think the Americans are starting to understand the value of iCasino. Europeans have known this forever, right? It's 101 to say the margins in casino are obviously much more than sports betting, and often sports betting is an acquisition tool. And I think you're starting to see the people understand that. And I think that little bit to Blue Ribbon, you're seeing other folks starting to acquire studios because sports betting's kind of done. I don't want to say done in a bad way, but people have kind of baked that in, and they're all thinking now, okay, when is iCasino going to come? And is that really when I'm going to make the money? And then how do I get an edge there? And I think you're seeing a lot of acquisitions now to get that edge. Should I bring my own studio in? Should I get my own PAM? Should I think about capabilities? That, I think, is now driving the day and getting a lot of people excited to hopefully capture some profits. Because, to your point, Julian, profits don't really matter today.
I think that's right. And also importantly, there seems to be a trend. I think the next 3 years are going to see a consolidation across the slots industry. I think we have a lot of independent slots companies right now. I think it's about 130, 140. I think that's going to decrease to about a third in the next 3 years. And I put my stake on the line. I think there's going to be a massive amount of take-up of acquisitions, aggressive acquisitions with ridiculous multiples of slots companies between now and 2025. It just seems to be that market. And there's two reasons for it, right? The first one is I don't think there's actually going to be that much survivability for independent slot companies down the line. I think evolution is starting to have the decision on that front, right? But I think also in terms of content, in terms of creativity, in terms of where IP is going, right? There's going to be consolidation because sportsbook has shown us that, right? The music industry has shown us that. Hell, even ride sharing has shown us that. And if you're in the UK and have taken a punt on Deliveroo, even delivery apps have shown, right? There's going to be consolidation in the market. And the same thing is going to happen with slots companies. That's just my perspective as well. I want to talk about the US and Tsachi. You've obviously got extensive US experience, and you've seen how the US is going. Where do you think the US market is right now? Where do you think it's going to go, say, for the next 12 months?
When you take the US, and you can understand that it's more of a B2C market. If Europe is more of a B2B, the US is more of a B2C. And what we can understand that if 70-80% of the market in the US are split only between maybe 8 to 12 operators out there. So I think that those 8 to 12 operators in the next 1, 2, 3 years will acquire their full tech stack to own it. If it's gaming platform, sport, game studios, we saw Penn National out of nowhere acquiring 2 studios. What's next? Now they are considered one of the big ones. So I think that if I'm analyzing the US market, so that 80%, 75% of the GGR, which is only 10, let's say, operators, tier 1, they will own their technology, and the remaining, the tier 2, 3, 4, will use the suppliers, the B2B. So there is a market for the B2B, but not as outside of the US. This is how I see it.
I agree with that, actually. Mohit, what's your perspective on the US?
Yeah, I agree with Tsachi. I think you'll have a shakeup, right? I agree. It's concentrated in the top names. I was just, again, before this, I have a spreadsheet of all the different operators in the US. I think there's 38, at least by my count. There's no reason to be 38. You just can't survive with how much licensing costs and acquisition costs and all that. I think that will be a next bit of M&A is, will the top 10 start picking off some of the bottom ones for some reason, whether it be market access or some technology or the team or whatever else. I go back to my iCasino piece. I think you'll continue to see more investments there. I think a lot of the lobbying efforts will start focusing on that end of it, and you'll see more opening of regulation. No surprise that governments continue to want tax revenue. They've realized they can't be wholly dependent on land-based operations. I think you'll see more iCasino coming, so that'll be another thing. And then I hope we don't see a breaking in the market with valuation and whatnot, but at some point there needs to be a break. I have no clue when that will be. If I did, I would be, probably not on this call. I would be sitting in a Bloomberg or something like this. But at some point, it's just the valuations are a little too hot. But they could go for a while. So I have no idea of when. But at some point, there needs to be a reckoning.
I can hypothesize when that reckoning could happen, right? So first off, for me, it's an advantage that prices keep on going up, right? Because the higher they go up, okay, if you represent sell side, it works, right? But I do recognize that at some points there are ridiculous valuations, right? And it's just at some point, if you just look at the EBITDA of a business, right, there should be a decent multiple because someone's going to do the reckoning at some stage, especially if it's a private company doing the acquisitions. I think that's going to stop when, or at least stunted when SPACs lose their purchasing power, right? And we're starting to see aspects around the Department of Justice and particularly Wall Street around curbing SPACs purchasing powers because they effectively allow, I wouldn't say unchecked rain, but as close to unchecked rain as spending as possible. And whilst it's good if you're on the sell side, there is only a limit before the inflation of an asset actually starts to bite back, right? Because if you're a buyer, you probably need to raise a bond or some sort of instrument that at some point is going to turn back. And we've seen some very big players, especially in the affiliate industry, right? But more recently in the operator space, especially if you buy them on an earnout, at some point you need to pay them back, right? And you just can't pay them back just in equity because equity is your purchasing power. That goes down, your purchasing power goes down as well. So my view is once SPACs start to be stunted or limited in their ability to acquire, I think we're going to see curb. I think SPACs will be curbed under this administration in the US, which effectively means that until 2023, 2024, we'll probably start to see some restrictions on that. But that's just my perspective. In fact, I wanted to ask you both, and Mohit, might as well start with you, right? SPACs, what should we do? Snog, marry, or avoid?
I would say snog. It's. I mean, I don't know. I don't know if the viewers will be as familiar, but I just assume they will be, right? They're structurally set up in a really odd way, right? They have all this capital. They've got 2 years to do a deal. The incentives are to do a deal no matter what, almost. The promote is severe. The uncertainty is severe because you don't know if you're even if you do announce a combination, when you do actually undertake the listing, you don't know how much money is going to be there or not. Like they're odd vehicles. And to your point, Julian, they've started to thin out, right? And one of the key indicators we've looked at is, and we've sold into SPACs, right? And when you sell into a SPAC, one of the things you're worried about is there going to be money there at the finish line, right? Because at the finish line, you have no idea as a seller, is there going to be 100% uptake or is it going to be 0%? You could do your analysis all day long. So one of the instruments that helps is these pipes, right? Private investments in public entities. And what they do is they can guarantee some money will be there. And as a seller, that makes you feel warm and fuzzy because there's some money there and you're not going to be just an orphan company. And over the past 2 or 3 months, we've heard and we've seen that the pipe market is largely dried up. You have all these investors at, the Fidelities and the Wellingtons and whatever, probably with hundreds of prospectuses on their desk, and a lot of them just kind of thrown their hands up and said no more. So it's been more challenging to do deals as a result. And to your point, Julian, I think the SEC is paying more attention. So I think we will see a slowing in the SPAC market, but that does not eliminate the fact that there's probably hundreds out there that have capital sitting on the sideline, and they're all heavily incentivized to do a deal. So I think we'll see less deals, but I think you're going to see more Hail Marys and people trying to get deals done.
Me personally, I would have wanted to see more money coming from private equity, right? Private equity is always kind of is the silver bullet for the industry, right? Now, private equity is kind of flirted with gaming, but not really, right? We've seen some takeover targets, but the buyers seem to be going mainly after cheap money, i.e. SPACs. Tsachi, what's your perspective on SPACs? You see them as an asset or a liability?
I think that everything will be dependent on the SPACs that are already being out in the last year and will be out in the next 6 months. Because at the end, again, as an acquisition, it doesn't end when the SPAC is acquiring the asset. It's just starting, and then the first quarterly report is out, and the second quarterly report is out, and the third. And if the market will see that there is good assets that have been acquired, so the trend will continue. Unfortunately, life is, it's like this. When you have so many SPACs, probably a lot of them will not be a successful one, and they can trigger a negative effect right after. Mm-hmm. So it really depends how the latest SPACs will behave.
Yeah, I'm really worried about this actually, and I think it's worth mentioning. I'm worried that SPACs could adversely bring about a consolidation in the M&A sphere, and I don't just mean bringing prices down, right? What we're seeing here, and again, I'm going to draw on Bitcoin here because it's actually quite and NFTs, which there'll be a very interesting panel on this tomorrow. But my view is every time there's free money or as close to free as possible, right? Frenzies go up and people start to do whatever they think is necessary just to get to a transaction, just to get their name out there in the press, right? At some point, there'll be a reckoning. And then what happens is the market moves the opposite way, right? It just doesn't correct. It corrects on the opposite spheres, right? So what you will end up with is you go from a period of unchecked hubris and actually buying everything on to buying absolutely nothing, right? And we need M&A. M&A is necessary in every industry because that is actually how cross-pollination actually occurs. And I'm worried that SPACs are going to be the weapon of mass destruction for gaming if we're not careful. It's already starting to happen in other industries. And I am genuinely concerned that unless this actually starts to slow down sooner rather than later, we're going to see a lot more problems in the gaming industry because it will effectively deplete what is good capital for the rest of the acquisition space, if that makes sense. So in fact, I wanted to ask a question. What's your general outlook? And Tsachi, probably you got to go on this one. What's your general outlook for M&A for the next 12 months? What do you see happening, and where do you see it coming from?
Maybe not the next 12 months, but really the near future is you can see a lot of markets in Europe, if it's Switzerland, and in South America, Brazil, and the US, of course, that a lot of land-based are now exposed to the online. I believe that we will see in the near future some of those land-based operators IPOing their digital unit in order to accelerate it and to create value to their shareholders I think they will not stick together because it's really a different operation between the land-based and the online. And once they have an online exposure, they launched it, they are happy with it, good performance, they will spin it off and IPO it. This is how I see it.
Yeah, I tend to agree with that view. Mohit, what's your perspective on acquisitions in the near term?
Yeah, I mean, we've talked about it. I mean, growth is still there. Capital is cheap. So I think you'll continue to see it happening. We talked about the SPAC market perhaps softening. I mean, when I scratch my head, though, there's not a lot of candidates left to, right, at some point. I mean, Tsachi, you brought a good point about how, you're going to get the land folks, carving out their interactive. But at some point, you're kind of scraping the bottom of the barrel, right? There's already been a bunch of SPAC purchases, a bunch of IPOs, and the gaming market is huge, right? But at some point, there's no more candidates left, and there will be a replenishment at some point, but it doesn't happen overnight. Like start new companies and get it going. So I'm kind of balancing those two aspects in my head.
My perspective is that I think we're going to continue seeing a lot of private-based sales by private-based buyers. We just won't know about them. And if there's one thing that's definitely true about the market in the last 18 months, some of the most exciting deals have actually happened under the table, not above it. It's almost like the unseen hand, this dark matter, right? That's actually silently buying up a lot of players, right? And at one point, we'll get to see a new name, a new face. It normally, from other industries and experience, it comes from private equity, but this time it's actually coming from a few very motivated players who want to stay quiet for now, which, gentlemen, I guess is the excitement of this industry we're in, right? Sometimes the curveballs just don't know where they come from. That's why we gamble, right? We're coming to the end of the session. I could talk about this for a whole day, by the way, but it's one of these very exciting industries. But I just wanted to thank you both. But ahead of that, any last words, Tsachi, for as a general wrap up for this session?
I don't. Listen.
Yeah.
Okay.
Sorry.
Yeah.
I think that we are lucky and fortunate to be in the most exciting times in the gaming industry, and to be the engine behind those M&As and IPOs. And it's good to be here.
Likewise, Mohit.
Yeah, I would echo that. Anyone who's on this call or in the industry, your time is here. It's extremely exciting. Take that chance, start that company, come with that idea to your boss. Don't be afraid. And to be frank, in the past, gaming sometimes had a bit in the negative light, if I'm honest, right? But gaming is really coming to the forefront, and it's an exciting time. So be happy you're in this industry and take some shots and see what's possible. You don't get these opportunities every day.
I echo that, and I want to end up on this note. I think we're actually quite fortunate that we're actually in this chapter of the gaming industry. It's like oil in the 70s or biotech in the 90s, right? Mm-hmm. It's a growth phase. There's a lot of capital, and there's a lot of startups that are powering it. So it allows talent to come to this industry, and importantly, it allows serious money to nurture that, which then lends us to venture capital and private equity. So on that note, gentlemen, I'd like to thank you for your time today. I found it incredibly, thoroughly enjoyable experience. But importantly, it's been a pleasure, an utmost pleasure talking to you, Tsachi, and you, Mohit. Have a great rest of the day. And keep watching and enjoy the conference.
Thanks, Julian. Thanks, Tsachi.